Hey, welcome to another edition of the Carman Show. And today's topic we're going to be talking about is high interest rates. Now, high interest rates, every time somebody thinks about getting a loan, they always want to know what their interest rate is. Well, high interest rates, personally, I think had a lot to do with some of the bad car loans that we've had over the past few months during this automotive crisis that we've been going through as a country. And just to kind of give you an idea, what are high interest rates? Well, or how are they? Most people know what they are, but how are high interest rates determined? How do you know whether you're going to be at one rate or another rate? High interest rates are based on risk factors. The higher the risk, the higher the rate. So there are a lot of you out here that could have A1 credit and think that I'll get the best rate. But if you're trying to buy a vehicle and you don't have any money down, that is going to get you a higher than normal rate because of the fact that your loan is a little bit higher risk. If you're buying a car that your credit says that you could afford a car that's 20,000, but you're trying to buy a car that's 40,000, which ultimately is going to get you a higher car payment, then your loan becomes a higher risk. And then, of course, there are the people out here that have credit problems. If you have a credit problem, definitely you're looking at paying a higher than normal interest rate. And all of this is based upon the higher the risk for the bank or the financial institution. Most places will not give you a lower rate if there's a high risk that loan may go bad in any capacity. You just want to make sure that you minimize the risk to the bank. Now, how do you do that? If you're buying a car and you have credit problems, then of course you're going to need a substantial down payment. You're going to need to be on the right car. You're going to need to actually be with the right finance company. When I say that, there are certain companies that specialize with people that have had issues and problems. And then, most importantly, the credit has to be as good as it possibly can be. Some of the things you may be able to correct, I would suggest trying to correct those before you try to get a vehicle. Now, in some cases, some of you out here that have 700 and 800 credit scores, which in most cases is considered to be good credit, what you're going to look at is that with you just have to be in the right situation. The loan has to make total sense for the finance company. I'll give you a perfect example. If you're trying to buy a car and you are trying to extend the loan out for 72 months, well, if you go out 72 months, you're going to pay a little bit more rate because the exposure for that bank is spread out over 72 months versus 60 versus 48. So the shorter the term of a loan that you can do, the better it is for you because ultimately it will help minimize the risk to the bank. Remember, higher risk, higher rate. That's really kind of how it goes. Now, there are a couple things universally, regardless of the credit, that each one of you need to know. One is money down is always gonna help your rate. Always, money down is always gonna help your rate. Shorter term on the loan is always gonna help your rate. A better equity position, and what I mean by that is there's a value on every car. So the closer you can get to the real value of the vehicle, because again, remember you got a profit from the dealership, you have taxes, license, and all the other things that are added on top of that. So the closer you can get to the real actual value or below that, the better chance you have on getting the best rate. And the last thing is to just finding the right finance company along with the right dealership that's going to work with you. Some dealerships don't specialize in helping people that and I'm speaking now to people that have credit problems. Some of them just specialize with people that have 700 credit scores or 600 credit scores and above. But I know a lot of you have below that. So, you need to find a place that's going to work with you based on your situation. So I just wanted to talk a little bit about high interest rates, letting you know that there are other options out here. We do a series of webinars on our website, which is www.thecarmanshow.com. Go and check out our website. That is thecarmanshow.com. Check out the website. You can ask me questions as it relates to your own personal car situation. We work to try to help you. We have a series of webinars that we're going to be doing, talking about a lot of different things that concern you, the automotive consumer. But in closing, remember, high interest rates are based on risk factors. The lower the risk that you can make it for the bank, the better rate you will be able to receive. Again, I always close each one of these segments by saying, you can with Carman.